Welcome back to India Tonight. I'm talking to the chairman of Oxford Investments, Surjit Bhalla, who in an article published in the Business Standard yesterday believes that in fact GDP growth for the year ending 31st March 2009 will be under 5%. In fact, he's just told us on this program that it will probably be under 4.5%, which if true is something like 3.5% below the government's estimate, which he says is just an imagined figure. Surjit Bhalla, let's for the purposes of the rest of this interview assume that you're right. Mm-hmm. And if growth is going to be under 5% and perhaps even under 4.5%, as you said a moment ago, then has the government taken the right steps to stimulate the economy?
Certainly not. And indeed, the wonder that I think about is how is it possible for the government to act so irresponsibly in the economic arena? And here I must explicitly say it's both the Ministry of Finance and the RBI.
Both
monetary and fiscal policy, and especially, I think, given the constraints of fiscal policy, I think when history will assess the burden of malfunction, it will point fingers towards the RBI.
Before I come to ask you what it is that they now need to do and need to do urgently, I would presume, let me ask you a quick first question. Do you get the feeling that the government doesn't fully appreciate the seriousness of the crisis India is facing, and therefore it doesn't have a clear idea of what to do?
I think, we have to come to that conclusion. Look, there are several very, very important, brilliant economists in the government, starting from the Prime Minister. And therefore, it really is a matter of great concern as to why simple economic logic is not being followed. And here I think, you probably know this better than I do, the inner politics of the Congress machinery. They are politicians who, and perhaps rightly so, think that as long as they choose the right sleeping partners for the election, they'll win.
So they're worried about politics, not economics?
And absolutely.
To what extent is the government misled by its belief that India's size, by which I mean India's domestic market in particular, will isolate it from the global downturn?
This is each question one has to wonder. Basically, we haven't been that isolated. Indeed, one of the marked successes of the reforms introduced in 91 was an opening up of the economy. Exports and imports together account for about 40-45% of GDP. How can you even think about saying that you're not vulnerable to
what happens? If exports and imports account for 45% of GDP, then when exports collapse, your GDP has to follow with it. What then does the government need to do?
Look, right now, and over the last few months, the major policy instrument that the government had, which it hasn't used, is cutting interest rates and cutting them radically and drastically.
And quickly.
And, and they have, what they have done is that they have cut rates by 3.5% and not realized that inflation has fallen by 10%. So therefore, that cutting the rates has actually made things even worse, because the real rate that you and I face, the real cost of holding money that you and I face, has gone up steeply. Most places in the world, in China, for example, the overnight repo rate is 1%. US, etc., it's 0. So Korea, etc., it's 1.5. Great Britain is 1. We are at 5.5, and we are not growing and that was the other thing.
Let me stop you.
Yeah.
People would be interested in knowing, if you were the finance minister today, given what you've just told me about economic growth, what should the interest rate be? What should the repo rate be?
Well, if I were the finance minister today, I would have good relations with the RBI and make sure that they are accountable. Politicians, I'm finance minister, I'm accountable to the public. The RBI governor is not accountable to anybody.
So what should the finance minister push the governor to do?
Basically, the repo rate should be radically cut to something like 2% from 5.5%. And I would have taken out all the cesses and all the surcharges on the income tax side. Those are the two simple in addition to what they have lowered in terms of the excise taxes.
But if you take the surcharges out on the income tax side, won't you further depress revenue collection and increase the fiscal deficit, which is already perilously high?
Well, here's the interesting calculation, and it's a wonder that people don't do it. You just said, if I cut the taxes, then my revenue collection goes down. And this was the same calculation that our former finance minister made, Chidambaram, when he raised the capital gains tax from 10% to 15%. How much extra revenue has he got? Not an iota, not a penny. So the point is, what you want for taxes to yield you revenue, economy needs to grow.
And if cutting taxes makes the economy grow, you get more taxes in.
You will get the taxes back.
All right. All of this discussion, and I suppose this is one that the government is going to be listening to, and therefore they're going to be asking themselves the question, should we be doing what Sujit Bhalla is telling us to do?
I'm not sure they're listening. They are in another planet.
Well, let's, for purposes of our own self-importance, believe that they are listening.
Okay.
Does it become easier for the government to follow your advice because the inflation rate is down to 3.2% and fast falling, or is that a factor that they need to bear in mind, and would it complicate things for them?
No, it makes it a lot easier. And indeed, and it'll be interesting to see how this government plays the following statistic out, that within 3 to 4 weeks, and certainly meaning with a high probability before the election is held, we will get a negative inflation number.
A negative inflation number between now and the 16th of May.
Yes. And then let's see, because this government says, listen, we believe that high inflation costs us votes. We need to get low inflation. What they don't realize, negative inflation is going to cost them votes.
In which case, this may well be the last question. What is the downside if the government doesn't act? They may not be able to act in terms of your taxation advice because it may be too late for that, but they don't act in terms of reducing interest rates and the repo rate. What's the downside if they don't act?
Well, the downside is that there will be a new government, and I think the people responsible for not acting will be and should be held accountable to the public.
But you're saying that not acting will translate into a negative political situation for Congress between now and May?
I'm not willing to state that, because I do believe that sleeping partners matter more, given a coalition government. But what I am saying is that there will be enough flack in the economy that whoever is elected, even if this government comes back, I think there will be a lot of very hard questions asked, and it will be impossible, in my view, for the government to sail through with the kind of nonchalance this government has shown to economic matters.
Very quickly, if they don't act, and let's say they only have between now and the 16th of May to act, because then there's a new government, will we see next year even more depressed than this because they failed to stimulate in time?
No, that's where I am quite optimistic that there are checks and balances in the system, though with this government the checks and balances have not worked. But I think the worse the situation has gotten, and indeed it is really about it.
But they could slow down recovery even if they don't impede it.
I think they'll be forced, their hand will be forced to act, and act sharply come June, whoever the government is, even if it is this government.
All right, Sujit Bhalla, thank you very much for coming and explaining to us what is for many people a worrying, if difficult to understand concept, that growth is less than the government has estimated and that the government is wrong in the estimates it's put out. Many thanks indeed. And if you have been, thanks for watching. Goodbye. Good night.